Hi, everyone. Thank you very much for joining with another Fintech Tour session. So this is all part of Fintech Tour 21, the largest cluster of Fintech events in the Middle East. My name is Sagar. I'm part of the Fintech Saudi team. And we've had amazing 2 days. And this morning was an amazing session as well. And I'm really pleased to have another great session here as well with Neha. So Neha is going to give us a guest lecture on payments are eating the world, how emerging technology has transformed everything. Jeremy Balkin, who was initially going to be doing this session, he sends his apologies, but we're really pleased to have Neha here with us. Neha is the head of strategy and insights, innovation and corporate development at JP Morgan Payments, and has been driving a lot of the investment in fintech and development of the fintech solutions at JP Morgan. As with all our Fintech Tour sessions, we love to have questions, so do feel free to write the questions in the chat box, in the Q&A. Introduce yourselves, get comfortable, because we've got a great session here. Neha's going to do a short presentation, after which we'll then do a bit of Q&A. So anything you want to ask about payments, this is your chance to do so. So without further ado, I'm going to just hand it over to Neha. If you want to share your screen, Neha, and you can start your presentation.
Thank you, Sagar. First of all, I just want to say, thank you from the bottom of my heart for having me on as a guest speaker. I am, very, very humbled and excited to be here on this FinTech tour with you, or at least part of this FinTech tour with you. Like Sagar said, please keep this very, very interactive. Just, a quick intro. Thank you for kind of sharing what my job title is, but really, as the head of strategy and insights for innovation and corporate development for our JP Morgan payments business, really I have the privilege of living in the future. And that's the part that excites me the most. And we're going to talk about that, where we see the next decade of payments going. And guess what? I can tell you the answer right away, right? Every business will be a payments business. And so, let's talk about what that means for you if you're a consumer, right? Payments used to be a boring sort of, task that you perform at checkout, but today it can be a lot easier and even enjoyable. If you're a merchant, your whole life has been transformed. I grew up in India, right? The fruit seller that has sold fruits to my parents for 20 years is now accepting mobile payments. That is revolutionary, right? So we'll talk about all of this and more. I want to make sure before we get started that you're able to see my screen. So Sagar, I am sharing my screen. Is it visible?
Not yet. Do you want to just click on the share screen button again and see if...
let me try that. Oops. How about now?
Yeah, now we've got it. Thank you.
Okay. Wonderful. So 10 years ago, a famous tech investor called Mark Andreessen famously proclaimed that software is eating the world. Today, we say that payments are eating the world. Payments are eating the world. Why do we say that, right? So as the world becomes more and more connected, interoperability and data transfer between platforms, these are the two forces that are at the heart of payments and money movement will be the future. Think about this. At the end of the day, what is a payment? It's just a transfer of data, right? You want to send $100 to your friend, that's a message. And then the actual transfer of the value happens from account A to account B, wallet A to wallet B. That's data and that's value. And that is what payments are, right? And we're saying that ultimately, right, if the last decade was about connecting people through social media platforms, which is called Web 2, this next decade is going to be about actually connecting those platforms. And how do you connect those platforms? It's through payments. And that's why we think that the impact of this will be big. In fact, so big that there's only one word that will fully capture what we're seeing. And that's the word on this screen share, Power Plus, which stands for platforms, online, wallets, embedded, real time. And the plus stands for the value-added services that really bring these to life.
Yeah, Neha, sorry, can you just enlarge that just a little bit so that it's easy to read on the screen? Just enlarge the PDF a little bit.
Oh, sure,
That'd be
sure.
great, thank you.
Just,
Super. Thank you very much.
yeah, I think this is kind of the most important part anyway. And I'll speak to each of these. Is this better?
That's much better, thank you.
Okay. So what is Power Plus, right? What we saw is that basically last year alone, there were $240 trillion of global payment flows. Like that's the amount of money that was transacted in 2020. It's a huge amount of money all over the world. Of that, we identified $54 trillion of value pools that are represented by these themes. Power, which is platforms, online, wallets, embedded, and real time, right? All of these combined represent $54 trillion. And what we found is amazing, right? This $54 trillion is going at a much faster pace than the rest. And these are the value pools that will shape the future of payments, the next decade of payments. So what I want to do today is walk through some of these one by one. These are, as I said, the mega themes that are sharing the future, that are shaping the future of payments. And within each of these, we've identified like sub-themes, right, which are highlighted here. But we'll talk about all of that. Any questions so far? Great. Okay, let's jump right into it. So what do we mean by platforms, right? So, okay, now platforms have been transformative in the last decade, right? As we've had better internet connectivity through mobile phones, and as we've had more and more data and computing power available through the cloud, these two forces have converged to create what are called platforms, right? And that has been the transformative force of the last decade. You have Uber, you have Facebook, you have all of these social media companies that are essentially platforms. They are companies that aggregate demand and supply. And think about it this way, Uber does not own any cars, right? Airbnb does not own any real estate. Yet, these are some of the biggest players in their industries. So what has happened is that this platform business model has transformed almost every industry. Now, that was the last decade. What's the next decade of platforms going to be about? We're going to see that now these platforms are going to come together and create what are called super apps. Now, think about it this way. How many apps do you have on your phone? Probably a lot. Sagar, how many do you have on your phone?
I've got about 40, 50 apps on my phone.
Okay, brilliant. Did you know that there were 2 million apps in the Apple App Store? 2 million. And an average US adult has about 90 on their phone. That's a lot of apps, right? But if you're someone like me, and actually an average adult only uses about 9 on a daily basis. So guys, app fatigue is real, right? And people don't want more apps. What they want is a one-stop shop where all of their, live things can be transacted. So basically sort of like an operating system for your life. And this is where super apps can be so amazing. In a way, they have superpowers. So I'm talking about Alipay, I'm talking about WeChat. Obviously, these are apps that are very, very popular in China. They were started in China, but as you'll see, they're starting to enter other parts of the world, and they have taken on local flavors. So we'll talk about that. But essentially, a super app is like a platform of platforms, right, that provide virtually any product, whether it's ride hailing or food delivery, or even a fintech loan, right? So it's like any need that you have can be fulfilled by this one app, which you never have to leave. But guess what? Guess what is at the heart of these super apps, right? So we analyzed about 24 super apps all over the world. And the biggest common denominator in all of them was payments. 22 out of 24 super apps had their own payment system, and they had their own wallet. And that's what makes these experiences so sticky and so unique, right? And what's more interesting is, like, if you think about it, these super apps, they aggregate demand and they aggregate supply, right? But it's more than that. They are more than the sum of their parts, right? Like WeChat has hundreds of thousands of services, right? But it's not just about like bringing those together in one place. It's more than that. WeChat understands what you like to eat, what you like to drink, watch, right? Which restaurant you like to frequent, and then it can leverage all of these insights to really provide you better recommendations in the future. So that's the power of a super app, right? It does more than just bringing people, demand, and supply together. Sometimes super apps will do very useful things. Like if you think about Shopify, right? Shopify is in a way a platform of platforms. What it does is it really makes it easy for e-commerce merchants to set up a website. So they don't have to worry about that. They don't have to go and find a website. All of that is taken care of for you. Logistics is taken care of for you, right? So these are core horizontal assets that the app just takes care of. And that's the power of platforms. And what we saw is that of the $54 trillion, 36 trillion last year went through these platforms. That's a lot of flows aggregating together in one place. And a majority of them, like 90%, were from China. But like I said, there are local super apps that are emerging. You have Reliance in India, which is a very interesting model. The Indian customer, and I can say so myself, is value driven, right? So Reliance has done a great job of making smartphones accessible, and through their Geo super app, provide good deals, provide discounts, so on and so forth. The Indonesian super app, Gojek, that's a matter of national pride. Grab in Singapore is all about convenience. So there's all of these local themes. And then the ultimate question is, will there be a super app that emerges from the West, right? Where will this next WeChat come from? Will it be PayPal? Will it be Google? Will it be Amazon? We don't know. But what we do know is that the American customer is very, very used to going to multiple platforms for one thing. So if a typical American customer's wallet fell on the floor, you'll see like 5 different credit cards, right? Not one. So the American customer in particular is used to having multiple relationships, multiple loyalties. And so it could be very interesting to see what might emerge, right? Here, maybe there will be a super app for sneakers. I don't know, it could be highly verticalized. And that's the question, and we'll see how that evolves. All right, any thoughts or any comments so far before we move on to the next?
So just a couple of questions which we've got particularly related to platforms I'm covering right now. So what would you say is the business model for the platform play? Are they working off a fee? Or is it a commission based, or how are they making money and getting returns if you're a platform play?
Yeah, so there are many different business models, and thank you for asking that question. So if you're a platform, the ultimate value that you are providing is matching demand with supply and making those transactions or those interactions between a customer and a service provider or a product provider easier, right? And more frictionless. Like what does Uber do, right? Uber matches drivers with riders, right? And it does that through a very helpful interface, right? It's local. It uses the features of the smartphone, like location, right, to find drivers and riders in the area. So that's a transaction. Now, Uber, like the customer doesn't pay anything to get the Uber app, but it does pay a per transaction fee, right? And that depends on the distance. And part of that goes to the driver and part of that goes to Uber, right? So it's like on a per transaction basis. But if you think about other platforms, like Amazon is a platform, Amazon Prime has a subscription model, right? Subscription models are very, very common as well in this space. So I would say it really depends. And sometimes it's a combination, right? Because with Amazon Prime subscription, you get maybe some shipping free, but the product isn't free, right? Obviously, you have to pay for the product. And behind the scenes, Amazon might have what is called a take rate. So that's another term that is often used in these platform plays. It's the take rate of the platform. How much does the platform get? Like what percentage of each transaction does the platform charge? Some platforms have come under a lot of criticism, like Apple, for example, with its App Store. The take rate can be up to 30% if you're the developer of an app store. So there's a lot of debate right now about, are platforms too centralized? Do big tech have too much power in this space? And that's where, we won't go into too much detail, but eventually that's where the Web3 movement, the blockchain and public blockchain in particular is going, where really the power, the users of these platforms want to claim back the power that they have on their own data, on their own identity, on their own social networks, and be able to take them from one platform to the other platform.
And I guess that's a really good question from Tariq, which follows on from that. Is he's asked about whether super apps favor monopolistic behavior, but they do tend to do that, don't they? Because they provide a centralized service for you to be able to use one app and one service provider for all your activities. And there's got to be a balance there between monopolistic behavior, which is not good for the customer, but giving the customer the ability to access it quickly and efficiently, the services as well.
That's exactly the point that I was making, right? So it's monopolistic in the sense that the platform owns the relationships with the customers, it owns the relationships with the providers. It doesn't own the providers themselves, right? So the providers could be third parties. So it's another example, this Amazon, yes, Amazon has its own products, but Amazon also primarily has third party small businesses that can open up an Amazon marketplace. So it's not, so it is third party. Now, what becomes the platform's role isn't the actual provision of those products, but again, those transactions, that matching, that ability to quickly find a product, right? That's where the platform plays a role. Where it becomes monopolistic is that if the platform really uses that data to only its own advantage, right? So for example, Amazon has been under criticism around the fact that sometimes they'll observe which third-party products are under a lot of demand, and then actually use that data to build the same type of product for themselves. Right, so that's a little bit of predatory behavior, and frankly, regulations could come. Like Google has been under a lot of antitrust sort of type litigation, especially in Europe. And that's also, this frustration is also spurring a lot of the innovation in decentralized marketplaces.
No, that's a really good point as well. Thank you, Neha. I have seen some questions here about blockchain. I think we'll come on to blockchain. I think we can cover that because I appreciate that that does cover some of the other areas, but let's maybe get through more of the power sort of structure. And then if anything's not answered through that, then we can of course ask those questions related to blockchain after that as well.
Absolutely. Thank you so much. This is awesome. Thanks for asking the questions, because it makes me feel like I'm not talking into the void that my laptop's camera is. There's a little green dot here, and then I have Sagar's face, right? So, so thank you very much. So how are online payments shaping the future, right? Now, in the past few years, there have been a few trends that have really shaped online payments, right? The continuing rise of e-commerce, right? We've all seen that. The growing need for digital identity solutions, right? That's a new one. And then ultimately the changing labor force. So let's talk about each of these. Let's start with e-commerce. Now, if shopping malls dominated the 20th century, right? Digital malls have already and will continue to dominate the next century, right? And I think that what we talked about with super apps is actually quite a good example of these digital malls. Now, let's talk about digital identity very quickly, right? So on average, did you know that an average internet user has 150 accounts that require passwords? That's a lot of accounts. And I bet you that most users don't have 150 passwords because that would be impossible to remember. I don't. I kind of have a few that I rotate around, and it's just not great. It's a very, very fragmented experience. And if you think about it, like most of us these days are concerned about our data online, right? But luckily there's a solution. The solution is a concept called digital identification, right? And wouldn't it be great if there would be a secure way to transact online? For example, today, and the pace at which things are moving, you're not going to know that the entity that you are interacting with is legit, right? Are they who they say they are? Because they could be anything. They could be a connected car, right? You could be sending a payment to a car. You could be sending a payment from your fridge to your car. Who the hell knows what that would be? You could be interacting with an avatar in a video game, right? So the other entity, how do you establish trust in this digital space, right? And that's where digital identification comes up. Now, the question is very, very complex because there are a lot of parties that want to solve this issue, right? And who have the right to solve this issue. You have governments who have historically provided you passports, your digital identification, right? So governments are naturally, an entity that can really play a part of this. Then you have banks. Historically, banks have been a metaphor for trust in society. And banks have been in the business of establishing identity of the customers who open bank accounts with them. They have been the custodians of very, very sensitive financial information. So should banks operate this identity layer? Or should it be another big platform? Like, should it be Apple that owns your Apple Wallet? Recently, Apple started this thing in the US where you could take your driver's license, you could upload it into your Apple Wallet, and that would be a valid form of identification if you got on a plane. So the Transportation and Security Authority, the TSA, would recognize the image that you show of your wallet on your phone. So that's pretty cool, right? And again, you're seeing this kind of tension. So ultimately, who will operate this identity layer is a question that needs to be resolved. Ultimately, our perspective is that whoever owns it needs to respect that, first of all, they're not owning anything. The customer owns their own credentials, right? It's my username, it's my password, it's my driver's license, right? Apple, Google, JP Morgan, or any government doesn't have anything to do with it. However, what a good player can do here is they can operate it. So they can own the database that runs this digital identity as a service so that it can become really easy for you to transact online, so that it can become really easy to trust other parties online. And that's kind of the vision. And there are, again, many, many different models for how this works, right? Like in India, you have the Aadhaar card, which is a centralized biometric model, right? In the UK, you have other models where, it's some combination of centralized and decentralized. And all of that, this space is rapidly evolving. So watch this space. So let's talk a little bit about, I mentioned at the beginning how the labor market is shifting. So let's talk about kind of two trends that bleed into one another. So you have the gig economy, but then you have a more interesting and more current version of that, which is the creator economy. So it's very interesting, right? We're seeing a lot of changes in how people make money online. So in 2020, the gig economy was valued at about 300 billion, and it's projected to grow to about 500 billion in 2021, which is the end, 2023, which is 2 years from now. Now, the thing is that historically, gig workers have had very different needs, very, very different needs than your typical worker, right? This is not your typical office worker who has a steady salary, who has kind of money coming in every 2 weeks or every month. What is really interesting and unique about these gig workers is that they have low savings, they have volatile incomes. Usually this is a side gig. It's a way to supplement your income if you're a student or you're doing other things. And they have very, very bespoke tax needs. They need to get paid quickly. They want to get paid instantly, right? And you're seeing a lot of fintech solutions that are emerging to fill this trend. And that's great. But what's even more interesting, right? So fast approaching the gig economy is what is called the creator economy. And what's the difference? So if the gig economy was basically becoming an Uber or Lyft driver or being a freelancer online, that was really about taking commodity skills and putting them on a platform and letting the algorithm find you your next gig, right? So it's about commodity products or commodity skills and monetizing them through platforms. The creator economy, on the other hand, is about monetizing your passion. It's about monetizing individuality. And that's a whole different ballgame. Did you know that more kids these days want to be YouTube stars than astronauts? I mean, that's crazy, right? But it's true. This is actually, I didn't make this up. This is from an actual survey. And what that means is that, there's a whole sort of economy that is burgeoning around influencers, around people who are creating new content on TikTok, and then using these platforms to make money online. However, the issue is that these platforms like YouTube and TikTok, they were not created with the needs of the creator in mind, right? They were created for the platform, right? The platform saw an opportunity and they said, okay, there's all this advertising money to be gained, so let's monetize these individual creators and their work, and let's promote certain ones over others, depending on how many likes and how many followers. So, all that is great, and that has done a good job of taking the creator economy already just in the last couple of years to $100 billion. So the gig economy was started about 10 years ago when Uber was founded, say in 2009. Creator economy was founded in the last 2 years. It's already 1/3 the size of the gig economy. That's how fast it's growing, right? Now, well, what's happening in this space is that the YouTubes and the TikToks are fast getting disaggregated. This is what happens when a space becomes really interesting. That's where a lot of innovation happens. And we're seeing fintechs that are taking what YouTube used to do. You know, YouTube owned this like entire stack of creator tools. That is now becoming disaggregated. You have fintechs that are taking slices of each layer of the stack and trying to solve that. So what does that mean? So you now have banks like Lance Bank that are, that are focused entirely on the needs of the creator. So their banking needs are met. You have certain payments companies that know exactly what creators need, right? So if you're a creator, you might have collaborators. You don't do projects alone. You want to look for other folks who have similar interests. You might want to split the payments that you get. So now you have tools that allow you to do that. You might want to directly engage your audience and totally ignore, the YouTubes and why pay their take rate when you can talk to your audience directly. This is where like the Twitter tip jar comes in. You can now tip people online. Clubhouse had something like this. So, so creators are looking to engage their audiences directly. They're looking to learn more about their preferences, give them more customized, more direct access to their work. This is really, really good for the creator class, right? And so these are just some examples, like I said, continuing rise of e-commerce, digital identity, gig economy, and creator economy that are fundamentally changing how we shop online, how we sell online, and ultimately how we make money online.
Thanks, Neha. Just one question which we've got around digital payments and the gig economy. How does it support financial inclusion? Is it about, you mentioned the gig economy getting their money faster? Is it about accessibility or sort of anything else? What cases are you seeing of fintechs being able to actually solve that pain point for gig economy workers?
Yeah, so we're seeing examples of where you can now have credit products based on aggregating the different income streams that a gig worker has all in one place. So if you're a gig worker, you're probably doing multiple gigs in different places. Your traditional bank may not be willing to give you a loan because you may not have traditional levels of kind of credit score. With the gig and the creator economy, we're seeing that actually there are some very interesting products where like there's a credit card that actually gives you credit on the basis of your YouTube followers. So again, these are early stage. So how popular they will end up being or how profitable these businesses are remains to be seen. But the fact is that finally the needs of this particular very, very important class, right? So I think in the next few years, we're going to see that 50% of the workforce in the Western world will be freelancers, creators, and gig workers. So you can't ignore their needs. And we're seeing some of those changes.
That's very exciting, a very exciting opportunity there and very exciting growth sector as well.
Yeah.
Very good. Should we look at the wallet section and then we can come back to some of these other questions which we're getting as well?
Yeah, absolutely. So wallets, very interesting, right? So how are wallets shaping the future of payments? So traditionally, wallets, as we all know, were used to store physical money, but that definition has been completely turned around its head. Wallets are now becoming more and more essential because they store not only money, they also store your credentials, like your username and your password, or your ID, like I said, with the Apple example. but ultimately, like the whole value, the whole definition of money has completely changed, right? So a typical wallet today may have some fiat currency, it may have stable coins, it may have cryptocurrency, and it, ultimately it may have like gaming tokens. I don't know how many gaming enthusiasts are here in the room, right? It may have NFTs, right? I'm not an expert on crypto, by the way, so I'm just gonna say that out there before people ask me kind of detailed questions about it. However, this is definitely a trend, and we think that what this means for the future of the wallet is very exciting, right? Your wallet is not just a wallet anymore. It's actually like a bank branch in your pocket, right? And why do I say that? Because if you have now one place where all of your value, all of your credentials are stored, that becomes the place from which you will transact, right? And so you're going to see how that wallets become kind of the key distribution point for further selling of financial products or further selling of lifestyle products. When I talked about super apps earlier, I said of the 24 super apps that we analyzed, 22 of them had wallets, right? So now the wallet has become this kind of central point around which all of this economic activity can occur. So we find that very, very fascinating.
And just on wallets, does it, so I guess it's moved away from just a store of money to a store of value, and that value, as you said, could be different components. It could be any of the ones you mentioned: stable coins, crypto, CBDCs, and actual fiat as well. But what is there a sort of a pain point there where you actually now have multiple wallets? Before you only had one physical wallet in your pocket that still had your wallet, that had your money, but now you've actually got multiple wallets on multiple platforms in multiple places. Yeah. All of which have a few. I know I've got multiple where I've got few pounds here, a few dollars over here, and it's just sitting there. It's not something which you move around and aggregate it at all. Does that sort of create inefficiencies in the system for the customer?
Excellent question, and thank you for asking that. So we think that there are two possible paths, right? What does the future look like? It'll be a tale of two futures. On the one hand, right, you could have what is called the contextual wallet, so that for every type of context you have a wallet. So there could be a wallet in your fridge, and your car itself could be a wallet on four wheels, right? So that when you're driving, you have easy access to money, and you can just make these transactions. You can buy coffee as you pass your favorite coffee shop, and it'll be ready by the time you pull in. That kind of an embedded, seamless contextual experience is possible because you have different wallets in different journeys that you would take as a customer. Now, on the other hand, there is the question of, okay, like now all my money is stored in all these different places, and it's not even real money. It's just like fake wallet money. What do I do with that? You could have, if things evolve in that direction, a universal wallet, right? Now, the question is like, again, it's a battle for like who will own and operate that universal wallet. There are some very interesting models out there. I'm currently leading an initiative where literally your palm can be your wallet. You can walk into the store, pay with a palm, and that's it. And it's kind of, Amazon already launched something like this, and they're still at the early stages. And we at JP Morgan want to empower our merchants with the right capability to make payments, like I said earlier, almost an enjoyable experience, right? It's so early that the question is, what's that right universal wallet, right? We like biometrics for certain reasons, and they can be scary for other reasons. But what's good about biometrics is that when you think about identification, and authentication, the question is like, okay, like today, a lot of the systems are based on something that which is a password, for example, or something that you have, It is often like a physical token or a one-time password or something like that, right? Biometrics takes it to a whole new level where it's about something that you are, right? That is immutable. And that's what makes it really attractive. So again, two journeys. Is it going to be about decentralization or is it going to be about centralization? And you'll see that in the world of commerce, in the world of payments, that is often, those are often the two opposing forces. And ultimately, there's some sort of homeostasis that occurs. But every time a certain innovation happens, there's usually a central incumbent player, and you'll see a lot of startups creeping up and challenging that incumbency, and that's what's happening with.
It's a super interesting it's a super interesting time, because you are at those crossroads of being able to see it could move in different ways. And one question here which Tariq's asked, I'm not sure the answer to this is, does this lead to the disappearance of the national currency to something which we're seeing a global value, a global currency, or some sort of global value? Or are we going to just really move away from thinking of currency as part of value, and just value can be lots and lots of different things?
I think, again, very, very interesting, right? So value can be lots of different things. If you talk to the Web3 believers, right? The vision there is that ultimately you will create a whole new internet, right? So today, let's kind of back up a little bit. So Web 1 was basically about taking the things that were physical and putting them on websites. It was sort of like, here's a magazine, and I can flip through the pages, or I can go to AOL.com and view the pages of that magazine, but it'll essentially look the same. It's not that different. Web 2 was much more, interactive. And now you can connect with your friends, you can recommend articles, you can watch videos. So it's a different kind of ballgame, right? So if Web 1 was about, taking this content, putting it online, Web 2 was about like actually connecting people. And Web 3, it's basically about creating this whole internet of value, where now, instead of just information flowing from one website to the other, you can now actually have, what we're calling value, right? It's not just your fiat money that goes through your PayPal wallet. It could be Bitcoin, it could be Ether, it could be NFTs, right? Which is another interesting concept of value, because it's actually an asset whose value can go up and down, right? So in a way, like Web3 is all about the internet of ownership. You can now own, and when I say now, it's the vision. It doesn't exist today, but the idea that you could be an owner of the internet. Like, one of my favorite examples is just last week, a virtual plot of land was sold for $2.4 million on this metaverse company called Decentraland. What is that, right? So it's really fascinating. Clearly, this whole idea of what can be owned today has been turned around on its head. And you have NFTs that look like, just like some child's art, right? Like, I don't know if you've heard of those Bored Ape NFTs. It's really just, I don't know. I mean, I don't see the art in it, but I think it's a use case. It showcases what is possible in terms of what we can own today and how that ownership can be enforced programmatically as these assets change hands. And that's all very good for creators, ultimately, right? Now, as a creator of some sort of digital art or physical art, through the programming, through the smart contracts, that money and those royalties can now flow to you. So it's more power to the creators and less power to the platforms.
Absolutely. I'm conscious of time, so I think let's finish the R and the plus, and then I'll save the rest of the questions for the end, because most of the other questions are sort of looking at the whole payments infrastructure as a whole.
Yeah, okay, so I'll run through this very, very quickly. I think I touched upon a little bit of these themes, but really, how are embedded payments shaping the future, right? Embedded payments really just allow customers to make financial transactions anytime, anywhere, right? And through connected devices in the journey that they are already on. So you don't have to like leave what you're doing in order to make a transaction, right? You do the transaction wherever you are. If you are texting your mom on WhatsApp, you should be able to send her money or make a purchase on it. So I think that's kind of the idea, and we're seeing these examples play out, and I touched upon them earlier. Connected cars, right? Your car is essentially not a car. Your car is a wallet on 4 wheels, and that's already happening. In fact, earlier this year, we at JP Morgan bought 75% stake in Volkswagen's payments arm. And what this is going to enable us to do is to really realize that marketplace that is embedded in your car, right? What is this marketplace? So basically, the cars of today generate like, I don't know, millions and millions of gigabytes of data. It's insane. It's sort of like supercomputers on wheels, right? All of this data is extremely valuable. So McKinsey predicts that this data is going to be worth $450 million by 2025. And so how do we monetize this data, right? Traditional car manufacturers are not software companies, let's face it. So unless you're Tesla, you're not a software company. And so they've traditionally struggled with monetizing this data. And so what we're seeing now is this whole generation of fintechs. They're sort of like the connective tissue between the car and then that is generating this data and the service providers that can use this data. So for example, your car can send driving patterns to an insurance company, and the insurance company can give you a more personalized rate, right? That's an example that already exists today. Or your car could send you, could take information about where you are, how many people are in the car, based on how many seat belts are tied. And then as you're driving through a certain place, show you, hey, oh, here's your favorite, bagel shop, and they're doing whatever, buy one, get one free promotion. And by the way, if you order now, it'll be ready in 3 minutes, right? So something like that. So there's a whole set of companies that we're seeing that I talk to all the time. These are companies that are called car data platforms. And all that they do is provide that API connectivity between car data and then these service providers on the other end to make these interactions happen. And in the middle is your car wallet. Literally in your dashboard, you'll see, here's your wallet, here's the money. It could be dollars, it could be whatever currency, or it could be some sort of fake money. And then the more you purchase at those places, the more rewards you get. So you see your wallet balance going up. And then using that balance, you can buy money. So you can buy those services. So that's the future, right? That's what embedded looks like. Another quick example I'll give in the interest of time is this example of gaming and virtual worlds. I don't know if you, has anybody heard of this dystopian term, metaverse? Right? Okay, great. So what is the metaverse, right? Like, it doesn't really exist today. People talk about it all the time as if, oh, it's here. Actually, it's not here yet. It's a vision for the future, but it's a really cool vision. I'll grant them that. So essentially, the metaverse is just, it's a vision for the future of the internet. I talked about internet of value, I talked about internet of ownership, but this is kind of taking that to the next level and saying, just like you have the real world, right? You could in the future have a network of virtual worlds. These are like alternate realities that could exist. And they already exist today, but they just don't talk to each other. So an example is Second Life. It's been around for 18 years. So it's kind of like it was one of the pioneers of this virtual world concept. You just hang out in Second Life. So it's like gaming, but without the goal to win, right? It's like social networking, but it's actually immersive, right? And 3D. It's like a marketplace because you can take your creations and you can sell them, but it's all user generated, right? So it's actual people, not big service providers that are, you know, building the new game skin or the new avatar or clothes or stuff like that that you can sell online. And so, and it's like Zoom, like what you and I are doing, but instead of being a planned, scheduled meeting, it's spontaneous. You just run into people. And in fact, in Second Life, people even get married, right? So that's the kind of level of connection that can happen in these places. The point being, people are spending a lot of time, right? We already spend 1/3 of our time watching TV, consuming social. That is going to shift towards these, immersive experiences. But again, the key thing to remember is that the metaverse is essentially a payments business. Now, you will still have a metaverse if augmented reality or virtual reality don't take off, right? However, you won't have a metaverse if there is not a way to transact within these virtual worlds or between these virtual worlds, or take the money that you've made in these virtual worlds into the real world. And that's why metaverse is a payments business. And it's going to be worth trillions and trillions of dollars in the future. So I find that absolutely fascinating. And it's an example of an embedded, it's just an embedded space where we will transact and spend time. All right. So just, I skipped a bunch of topics. I encourage everyone to, reach out later. I'll just end quickly with real time, which is a very broad theme, but essentially, customers expect today that when they transact online, the money won't just be available in a wallet, but it will actually be available in their bank account. And that's where things like real-time payments come in, right? But what's interesting is that a lot of the emerging economies, so last year, India, for example, was the #1 economy worldwide in terms of the number of real-time payments that were processed. And the US was at number 10, right? So a lot of the growth in this very, very important theme is coming from outside of the Western world, and which I personally think is amazing. Now, I think that a very important use case here that needs to be fixed is remittances, right? So today, remittances cost way too much. The US has, the UN has set some standards to say like the remittance, should cost about like 3 to 4% of the value. Today, it's still at, I think, 7 to 8%. So it's way too costly. It's way too frictionful. And there are many remittance corridors that don't even exist today. And you have countries whose entire economies depend on these remittances, right? And my own personal experience of remittances has been really kind of, important here. When I was a grad student, I had to repay a loan that I had taken from the State Bank of India. And I literally would like walk to the bank, physically walk to the bank, withdraw the cash because it was way above the ATM limit, walk to the Western Union, give the cash, send it to my dad in India, who would walk to his Western Union, take it out, and then walk to his branch, right? So just ridiculous. Thank God there are apps for that today. So, people don't have to do what I did, but it's still quite expensive. And these are things that need to be solved. And this will help with inclusion, and it will help connect diasporas to their home countries and support them and their families in that way. So anyway, I mean, these are just some of the broad themes that we think are shaping the future of payments. We did publish a white paper. Jeremy Balkin and I co-authored it. It's called Payments Are Eating the World. You can just Google it, or I'm happy to share a link. And you'll see a lot of these examples and much more content there.
No, thank you, Now. That's been really, really insightful, and payments do seem to be eating the world, not just our world, but the virtual worlds as well. So it's yeah, a lot of exciting. You've got a lot of content there, and a lot of exciting trends there. So thank you for that. It's been really, really immersive, and it's been really helpful. I think for the audience, we've still got a lot of people staying on, so it's definitely been a lot of content there. I appreciate, in the interest of time, I just wanted to cover two overriding questions which we've been asked in the chat. So one is, how is blockchain being used across this sort of value chain? Because I appreciate it's being used, of course, with cryptocurrency and stablecoins, but where else are you seeing blockchain being used across the other parts of power? And the second question is, what does this mean for banks? So being from JP Morgan, if this is where we see the future going, what does that mean for a bank like JP Morgan?
Yeah, a great question again. Thank you for being such an excellent audience, first of all. At JP Morgan, we actually have a dedicated business unit called Onyx, which is all about exploring the future of finance through blockchain. Now, one of the very powerful examples that is already in place with the bank is using our own private permissioned blockchain for cross-border payments, right? So cross-border payments between large corporations is still very, very kind of annoying. It's full of friction, it's too expensive. But we have piloted this, and in fact, this is scaling beautifully, is this use case of taking a payment from a JP Morgan account in one jurisdiction for a client, and then sending it to another client as long as it's within the JP Morgan network, right? And those are instantaneous. That's the internet of value, right? It flows instantaneously, and it settles immediately. And that's just one example. We're looking at a lot of other use cases. We're looking at digital identity on the blockchain. It's called self-sovereign identity. We are looking at also sort of assets and how might we leverage the blockchain for crypto assets. And again, it's early. We don't yet have a solid kind of definitive point of view on, okay, will NFTs be the future, or is it just a bubble or not? But there's a whole kind of think tank and an entire business unit that is testing and experimenting with these blockchain-based use cases, testing them with clients, and then also commercializing them.
And for the banking sector, sort of looking at more widely, what does this mean? So if we're seeing payments are going to be doing through platforms, you're going to have these decentralized wallets, it's all going to be embedded. And payments historically has been a big part. Banks have been sort of at the center of the payments universe historically. Does that change the environment with the relationship with the bank? Does it disseminate the bank? Where do you see the view on that?
I would say it depends on the type of bank you are, okay, right? So if you are a forward-thinking, innovative bank, you recognize that these value pools cannot be ignored, right? And that's kind of why we put our point of view out there, because what do we do with this information? Two things. One is we want to make sure that all of these platforms, all of these companies are at the very least our clients. But that's not, not all, but like that we are covering these flows so that they do flow through JP Morgan. Why? Because we bring trust, we bring security, and we frankly bring the breadth. It's not just payments, it's liquidity, it's FX. Right? There's a lot of kind of deep expertise that we have across the globe that fintechs don't have. However, that it doesn't end there. This is where kind of my job comes in, right? So we put our thesis for where the future is going, and then we use that as a way to learn more about fintechs that are innovating in this space. And then we make decisions about investing in them, partnering with them, or potentially acquiring them. And that's why I said my job, I have the privilege of living in the future, because I have this unique opportunity to talk to the founders of these wonderful fintechs that are innovating at the edges. And then we have an opportunity to kind of take what they have developed and evolve it, because what we bring to the table is all this deep expertise and trust and regulatory backing, along with millions and millions of clients. So if a fintech has a solid solution, and they work with us, they get immediate scale and they get immediate like market feedback. And it's very rewarding to see that when that happens.
Excellent. Thank you very much for your time. Unfortunately, I think we've run out of time. It's been such a great session and we've got so much content there. If there were any other questions which we had, then please do email them to us at info@fintechsaudi.com, and we will try and get those answers for you around payments. But Neha, thank you very much for stepping in at the last minute, and appreciate it's quite early there as well in New York. So appreciate your time in joining us and contributing to the FinTech Tour. Thank you all for joining. We've got such a great audience and had so many questions as well. So really appreciate the questions, really appreciate the interaction. You can visit fintech-tour.com to see all the other events happening during the FinTech Tour. We've got some great events on digital banking next week. We've got InsurTech this evening. We've got RegTech, SubTech. We've got so many different great areas to focus on. So definitely encourage you to register for some more insightful sessions like this. Other than that, I wish you well. Thank you very much again, Neha. And we look forward to collaborating with you in the future.
Thank you so much. The pleasure was all mine. And talk to you soon.
Take care. Thank you very much.
Bye.
Bye.